is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Claremont. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Well, yes, Tom, your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Hi everyone, Basil Chapman sitting in for the one and only Tom O'Brien. I'm usually the host of the noontime show, the Tiger Technicians Hour, and my service here is a daily newsletter called The Opening Call. Let's get to the numbers, and thank you to Tommy Jr. for a great summary. We can spend a little more time now elaborating on these different indices. The Dow is down 26, had a very sharp, went down over 100 points early in the morning from the overnight sell-off. What's really important here, and I have to consider that, is a technique that I've used for a very long time. You see, on the left side chart, you've got a daily Dow. In the middle is a weekly. On the right is the monthly chart. And within the context of this daily chart, you'll see that there's a green line. I'll just make it a little brighter there. This dashed line, the green line, and a red line. This little up channel, I call it a Chapman wave inside track. That's a repellent zone. The implication is that when the price goes into that area, let me just make this a little bigger. Look, I'll expand that. You'll see that every time from the December the 4th, when it hit 24,534, the Dow was repelled at that line. It hit that line exactly on December the 18th at 24,876. Pulls back. Each one of those consolidations just used a little bit of price and a little bit of time. The second one actually used more time, about 10 sessions before it broke to the upside. So now what we're looking at, let me put it back again so that you can see it a lot clearer. Look at this. All of a sudden, the Dow gets stalled right at that trend line yet again. But the reason why, for subscribers, I did not want to do any shorting at this particular point is that the volatility index, and I'm just going to go to this as one of the charts that I show my subscribers. I used to show it every day. I don't really have time anymore to do it every day. But let me show you this. I call it my 5 quadrants, actually. There are 5 places that you can look. This is the 120-minute Dow. Went to a peak E in the Chapman wave. D and E is where we start to become a bit cautious. Doesn't mean you have to go short or anything. It just means that on the way up, that's where other things can happen. But what happened yesterday is that the volatility index, the VIX, which really is a measure of, they call it greed and fear. I think it works best if you think of it as a fear factor rather than anything else. And the fear factor really only creeps in when it spirals to the upside. But you really need to see a proportionate sell-off in the prices of the indices. Otherwise, this is just an emotional spike, which I think it was. And it went first time 11.06. That was the spike that went on the 2nd of January. And then out of the blue, look, the market turns around and look at these series of higher highs, over 600 points. I mean, that's a huge move. Well, that was one of the reasons why I thought, no, too quick, too much, too fast. So I'm watching this really closely, and we have a formula. It says that if a certain thing happens this afternoon after 3 p.m., maybe that's when you can consider shorting, but not until then. And even then, there are certain parameters that have to be hit. So, and here's Richard Arm's Trin Index. I call it the Chapman Wave Trin Gauge. I only use numbers. It gave me a signal to say that tomorrow morning, early in the morning, the Dow should break to the downside, at least momentarily before it attempts a rally. It's really a lovely signal. It has a really good history of giving calls It did fail back on the, that was on the 18th when there was that huge spiral to the upside in the Dow. And this gave a signal. And then it was followed the next day with another big move. And that didn't work out. But it's one of the very few times that it hasn't worked. All right, let's get back to our story. So it says that there's a chance that we could have some kind of some weakness in the Dow early tomorrow morning. Now, this is really important. The weekly chart has had a spectacular move. It's in leg E. The MACD, the moving average convergence divergence, is really strong. The stochastic is at 96.54. Going over 80% is positive. Once it's in the 90 to 95% area, that's really strong. Above 95 to the 98 area, doesn't usually get much more than that, is really strong, but you're starting to get to an overbought level. However, you can stay overbought for quite a while, so you have to use other indicators to suggest that there's a top coming. We'll be looking at the candle for Friday. Is this going to be an E that starts to fail and we start to make lower lows going into Monday, Tuesday? Oh, Monday's a holiday. Going into early next week, we'll see what happens. But in the meantime, so far, very good action, and the monthly chart is outstanding. Let's just quickly go over to the S&P. S&P/X is down a little bit more than the Dow. It's down 5.47, down 0.20%. The Dow is only down 0.15%. So here you've got the same thing where the S&P went into this up channel resistance area. It's pulled back. The MACD and stochastic are still very strong. On-balance volumes turned down, but so far prices held very well. Let me make it clear. If the Dow closes under 25,250 in the next few days, that's starting to signal, upside's becoming limited. It doesn't say you have to crash, but it does say upside's limited. Watch out for consolidation. And the S&P at 27.45, if it starts to close under 27.22, that says you're under the 9-period moving average, this beautiful black 9-period exponential moving average. You see that line, that moving average? It's held support all the way. And if it goes underneath that, that's a problem. The weekly chart is still good, but it's in leg D, and the monthly is in D. Now let's go quickly through the others. But before we do that, I just want to show you something in the E-mini. The 5-minute made a peak F in the Chapman wave. So that makes it really obvious that if there is any price movement, this is the 5-minute chart, this is the 10-minute chart, that's made a peak E. Right in that same, you see that same technique of the up channel resistance, that inside track repellent zone. If there is a pullback under 2743, it's at 2745.75 right now. Any 2 bars, any 2-minute, 5-minute bars under that level, 2743, will signal there's probably going to be a weak close today, and any push above 2749 would say, narrow close, save the day. So let's get back to our story. We'll look quickly at the QQQs before we run out of time. QQQ pulls back a little bit, down 64 cents at 161.93. This is a different chart formation, and we need to talk a little bit about that. We'll put it together with the SMHs, the semiconductors, and then we'll talk about this NAFTA situation that's just cropped up. This is very interesting because STZ, Constellation Brands, which has just been dynamite, is suddenly pulling back. It never pulls back. We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
One and only Tom O'Brien, and we're looking at the QQQ's down 0.71. That's the Power Shares QQQ Trust Series. Make it real simple. A push above 163.04. No, I'd close. It mustn't be a push. It has to be a close above 163.04. Will imply that the QQQs are going to hold very well, at least into early next week. A slide under 160.20, 160.54 is this 9-period moving average that since it spiked above, it actually accelerated like a rocket above from the 2nd of January. If it closes below that, 2 out of 3 sessions, that's going to probably impact the weekly chart. We're going to be watching that closely. Now, talking about trend lines, see, there's an up channel, but look at this trend line. This trend line goes back a long time. This is a very long-term trend line, and the price twice, last week and this week, went bumped right up against the resistance. It hasn't broken above it, and that's why I'm saying that a close above the high of yesterday would imply that, yes, we're going to mess around and try to hold above that. But what's really important here is that the SMHs, the semiconductor, the market vectors semiconductor ETF trading at 101.26, down 1.45, 1.41%, had the opportunity to try to test the left side high that was made. Let me just open this up a little bit, at 105.83. 2 bars that hit the exact same high, all-time high, on the 22nd of November and the 24th of November of 2017. Plunges down to 95s and rallies back sharply to 104, and now it's trading at 101.26. If you look at the weekly chart, you'll see that the MACD, the moving average convergence divergence, has shown no interest in rallying. It didn't confirm the cup formation. And the stochastics way down to 60%. I think that the semiconductors are going to lead. They led in the whole of 2017. They pretty much led every rally. They led every correction. There was a rally where the semis didn't. I think it was late summer where they didn't make new highs. The QQQs did, and that led to another pullback. So I think that it's very important that we monitor the SMHs. And if the SMH at any point in the next 3 days, instead of breaking under 99.50, punches back and closes over 103.96, the high of the 8th of January, that would be very impressive. I just don't think it's going to do that. I think that it's stalling. Almost all the semiconductor stocks have had a decent bounce, and now they're giving back some important gains. So now what's important, let's look at let's just complete this because we want to look at gold. And gold at this particular point is up 5. It had a big move up, and I was mentioning in my show at noon today, my Tiger Technicians Hour, that there's a difference in the chart that I'm looking at of gold. It's still a very powerful move in the daily chart. The MACD is still very strong, the stochastics at 88%. What I said was that there's a difference between this and platinum. The platinum chart has held at the highs. It hit the 9-period moving average and then it bounced right back. Just as a chart pattern for the day, this is a better looking one. This is the one that would have said to me, hey, you better start grabbing golds and gold stocks right away. The one that I'm looking at right now says, yeah, it's in play. But after such a big move, I would not be surprised if there's a bit more of a consolidation. So this is what's going to be very important. If gold breaks into the 1337, 1342 area in the next few days, by Friday's close, that is, that's going to be very important. That'll signal that you now got a very deep cup formation, more like a V, but we'll call it a cup for now, that says that now you've got a pattern that has, in fact, the potential to spiral back to the high that was made way back on the 8th of September at 1366.9. Have a look at the chart. The weekly chart, the MACD crossed positive. It's done that before, but it's holding very nicely. The stochastic is still very weak at 70%. If the stochastic can start to hold over 80%, gold is going to go much higher. So this is a very important period for gold. But if you put it together with the TRCCI, which is the Thomson Reuters Continuous Commodity Index, that's holding very well. That hit the 9-period moving average. It's bouncing now. The MACD is still good. The stochastic's at 82%, not as good as it was before, but still very strong. But it's the weekly chart that is really quite impressive. Look at this. I'll open it up. The middle one is the weekly chart. See, there's a lot of action going on trying to make that magnet of that Chapman wave inside wedge target line. So we're going to be watching this closely. It's at 423. It's up 96 cents. If at any point in the next week it gets to 430 instead of 417, and it's at 423 right now. So 37 points up or 7 points down, let's say, going to be very important to this index. But I think it's awoken. And I think that the Fed wants to have some inflation. And that's the reason why we've got to look at it. Now, I'm going to go to something that I think is going to be a surprise. TNX, which is the 10-year, it's a red candle right now. It's still up 4 cents. But it did exactly what we were looking at in terms of spiking towards the 26.15 level. And this is that leg D. Remember, D is where we start to look at the potential continuing or pulling back. So this 10-year, the 5-year, let me put them all together, the 5-year T-note, FVX.X, the 10-year and 5-year, now that 5-year is just screaming to the upside. I'm going to get rid of this for the moment, and I'm going to show you something that I believe is, in one picture, it gives you an incredible amount of information. So we're closing out on the chart that I have right here with the 5 and the 10-minute E-minis. And we're going to go to my chart that shows what I call, and I show my subscribers every weekend, the triple yield weekly chart. What does that mean? In white, it has the 30-year T-bond yield. The brown is the TNX, the 10-year weekly yield, and the FVX, which is the 5-year T-note yield. And you will see the strong move up in the 30-year. It hasn't broken out yet, but you've got a leg D in the weekly of the 10-year. You're only at C in the weekly. If ever there was this, if ever the market needed to get a little nervous, this is a good reason, because you're starting to see very strong upside moves in yields. What does that mean? It means there's a flattening of the yield curve. There are a whole bunch of connotations. Let's just keep it as simple as possible. Market usually ignores this sort of thing until it doesn't. And when it does, it just focuses on this like a laser. Has it impacted the HGX, which is the housing sector index, or wood, which is the Wood iShares Global Timber and Forestry ETF? Not really just yet. The Philadelphia Housing Index, HGX, is down today. It did make a new all-time high. So we're going to be watching this very closely. And a wood, which is the Global Timber and Forestry ETF, pulling back a little bit. We'll do more of this when we get back. And then I want to look at SDZ. That is the Constellation Brands. We'll see how that's reacting to the NAFTA news.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman sitting in for Tom O'Brien. Dow's down 40, S&P is down 6.5. And we're about to go to SDZ, which is Constellation Brands, but I was asked about the cryptocurrency. So I just wanted to say, if you look at chart formations, if you understand the concept that patterns repeat over and over, and that there are only three directions, straight up, straight down, that's one, cup, or a V-shaped pattern, that's two, or an arch or inverted V-shaped pattern, that's three. If you're looking at this, what we're in this particular chart right here, with the cryptocurrency, it doesn't matter what it is. You see the arch formation, In fact, you can even see it went to peak A, peak B, peak C, peak D, and boom, it comes down. So these are the patterns that you need to be following. So here's the arch, and you're going to see that a lot ever since we had, now I can get out of this, ever since we had in the GBTC, which is the Bitcoin investment trust, the peak F in the Chapman wave, it's pulled back and it's been consolidating. I think this consolidation is going to go on for a little longer, and there's that arch formation. And that just happens, doesn't matter what time frame. That's what you're going to be looking at. So now let's go to STZ. I just want to bring that up because I asked about it. And all I'm saying is watch out for that left side low. If you take it out, other things can happen. So here we go. STZ trading at 219.65, down 2.45. Constellation Brands, A shares. Spirits, I mean, they're involved in so many things, beers and wines. They've been the leaders. And whenever I've heard the CEO interviewed, he just seems to be right on top of whatever the current fad or fashion is in the business, and he's just done everything right. I was looking at this recently, and they were about to come out with earnings, and I thought, no, I can't take a chance for subscribers. We once did that, and we were wrong. It's not worth doing it. But everything about it said that it was making some kind of a top. We were at the D. I think that the Constellation Brands earnings came out on that spike. That was on the 4th of January, and it hit 229.50. This is what's very interesting. The MACD pulled back sharply. The stochastic pulled back sharply. It gapped down. It's treating the 9-period exponential moving average as resistance. I don't know what they said, but as I say, they've done everything right. It did make a weekly, what I call a Chapman wave 2-bar reversal, with just a fractional difference between the left side high and the right side high. In this case, the high of the week of the 29th of December was 229.42, and 8 cents higher. On the week of the 5th, it goes to 229.50. Big red candle, leg F. I suspect this is a peak F. This is going to be serious because the MACD and stochastic are pulling back. Serious for the weekly because it hasn't done that for a long time, since even over there it pulled back, but nothing happened. So now what we're looking at, and this is going to be very interesting, leg E in the monthly chart. What on earth could they do wrong after doing everything right? I don't know. But it is amazing how charts, when they have become overbought on a purely technical level and then continue higher, like a caterpillar, you just look and you say, what on earth can bring this monster rocket ship back to Earth? It just, everything they're doing is right. Well, it's D, caterpillar's D in the monthly, leg D in the weekly, G/C in the daily, with 2 little doji candles suggesting it's running out of upside energy. That's a sell signal. 161.68 is the 9-period moving average. It's trading off the high that was made earlier today, all-time high of 167.52. It's at 165.85. What's really important is that if these fantastic stocks are going to consolidate, what will take their place? Because there's been sector rotation. And that's going to be the issue over the coming week. We will find out fairly soon which stocks are building some kind of, is it the infrastructure stocks? What stocks are going to take their place? And there are always stocks to take their place. But in the meantime, look at Caterpillar. MACD is very strong. Stochastics at 96% on balance volume. The blue line just turned off the top. Weekly chart looks spectacular. Monthly chart looks spectacular. So this is going to be very interesting. So shorting certain stocks, you have to just get everything perfect, and it has to work, and you really have to see it work immediately, and it has to break key support. I mean, key support in Caterpillar, that would be the low right here, 155.40, 10 points lower. So we'll be watching all of these. Now, what I also wanted to say is that EWC, Tommy was talking about the NAFTA, something about the NAFTA agreement. So EWC, which is the iShares MSCI Canada ETF, it's pulled back quite sharply, down 33 cents at 29.83. The MACD and stochastic are still pretty good. However, the pattern is suggesting that there might be resistance now at the 30.25 to 30.38 area. And if it takes out 29.60, it's heading straight for the 29.51 9-period moving average of the weekly chart. If it starts to trade under it, then this ETF is in trouble. But in the meantime, still holding pretty well. What's really important about this particular phase is that finally we are starting to see areas that could become market hindrances or market, not tailwinds, but in fact, winds that have to be overcome. For instance, the yields that we're looking at here, we've seen these yields before. Even the 5-year, look, if I squeeze this, we were there in 2011. We were even higher in the 5-year. Look at the 10-year. We've been there many times. We've been even way higher than the 10-year. And the 30-year, 2011, the 30-year was at 47. It's trading right now at 28. So historically, what's going on here is a little different because there's a breakout. There is the change in the yield curve. That's different. So that's number one. Number two is, out of the blue, you get the NAFTA thing. So General Motors, which was doing beautifully, we happen to, for our subscribers, we happen to own it from the 34s. And it's trading right now at 42.94, down to 1.11. Making a cup formation, starting to fail a little bit, but this is something to watch. It's at a terrific move. I'm not sure how it's going to affect it, but we're going to be watching it closely. The most important aspect that we need to be looking at, I think, right now, you see the transports have had a tremendous move to the upside. Leg E in the daily, leg E in the weekly, leg E in the monthly. So on a purely name basis, notational basis in the Chapman wave, they're becoming somewhat overbought in letter. And we'll talk about the technicals because the weekly technicals are still very strong. And now we'll go to crude oil and we'll look at the airlines as well. Do a relationship of the transport. Basil Chapman sitting for Tom O'Brien. Now it's down to 20. Be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
If you haven't tried David White's weekly investment newsletter, The Technology Insider, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Technology Insider. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com. If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Hi, everyone. Basil Chapman sitting in for Tom O'Brien. We're looking at the IYT. This is the iShares Transportation Average ETF, trading at 198.86. It's up about 7 cents. And a very nice series of moves to the upside, with the MACD confirming, stochastic confirming. So what is the support? If at any point the IYT starts to trade for 2 out of 3 days under the 9-period moving average at 196.34, I'm going to actually make that if it goes to 135 or lower. That's going to suggest finally there's at least a sideways consolidation in the transports. But wait a minute. The XAL, which is the airlines, which I did this morning, had a very nice pop to the upside. However, the technicals here are already not working in the airline's favor. It's not. The XAL is the ARCA airline index, trading at 116.75, up $1.71, after having about 12 sessions to the downside. This is the first big candle, tried to close above the 9-period moving average. The weekly chart is still holding very nicely. It has 114 support, but here again, let's look at the upside. Just with the IYT, if the transports break to a new high, that's very positive in the next few days. If the IYT can close above 119.39, the high of the 21st of December, that'll really be terrific, and that'll say it could tackle the left side high of July at 122.13. I think it needs to wait. This is the way I'm looking at it now. One of the reasons might be that you've got crude oil trading. It goes up 40. Yep, it's up 44 cents at 63.40 this year again. A little leg D, a leg D, a strong leg D, but a tiny little doji candle. Now, as far as I'm concerned, I use very few in candlestick charting. I like it because it opens up the bars. You can see them clearly, the peaks and the troughs. And each candle tells you a story. But I really only use a couple of the candles. Like one is the doji. The other is something I call the Chapman Wave Roman candle. It has a whole bunch of implications. And the other is when there is a small little candle, a little doji candle, and then a higher bar, and then a turn down, or the same thing happens on the upside. It's what I call a silent doji. There's a technique that I've developed for that. I'm looking at this and I'm thinking, okay, excellent technicals in crude oil, but at this particular point, it's at a spectacular move. Look, there's the weekly broke out very nicely. The monthly chart is actually beautifully, it's in leg B. So this is very strong for crude oil. So if there's any pullback, I keep getting asked, would you short gold crude oil? I don't think so. There are a couple of surprises waiting there. And it has support. It's at 63.40. It has support at 61.63 now, the 9-period moving average. However, I'll be watching this closely, because if there is a push from the 63.40 area, all of a sudden you're looking at 64. That is really a very big breakout to the upside. If there's a pullback and it goes to 62, under 62 in the next few days, yeah, I could go down to the 60, maybe even 59 area. I just don't think it's a short because crude oil is the surprise factor, the overseas surprise factor. Like gold used to be. Gold doesn't mean that for a long time. Crude oil has been more of that. So I'm just saying that it's acting very well. It's got tremendous support in the 59s where it broke out. So that's what we're looking at there. A couple of things I just wanted to show you. High-grade copper. Tried to rally, it failed. It's just a high-level consolidation right now. It's at a fabulous move. Just needs some time to consolidate that. So I've gone through a bunch of things here. I had a couple of questions that I said I would get to. One was GE. Is GE a buy? I think this is really good action in GE. It's up today, 39 cents at 18.95. I think this is the start of a move that it probably has to do a little bit more digesting in the low 18s. But it is participating finally because of its whole position. You remember, Immel did everything wrong from the day he took over, and he promised that he would make GE a great company to the moment that they left Connecticut to go down to the most highly priced city of all, the Boston waterfront, to build a new building which just had the water coming along over the embankment there, right, the wharf. They've done everything wrong. But they went into crude oil. They got out of the banks when they should have been going into the banks. They got into the crude oil, into the oil market when they should have been getting out, not going in. Now it's maybe going to work for them. So I think, yes, I think GE is kind of in play right now. 17.25 was the low of the 28th. And I wouldn't be surprised that, yeah, at worst, I think chop, chop, chop. It doesn't really go anywhere. But at best, you might find that it actually fills in this very ugly candle of November the 7th, the week of November the 17th, 20.75 high, 17.46 low. And yes, I think it's in play. And maybe if the market does do a little digestive phase, which I think is getting close to, then you might find that stocks like GE, the real laggards, suddenly find participants. Let me do this again. Daily chart broke above the recent very strong resistance on the 30th. At 18.59. Ugly candle, very ugly candle from the 13th, and it's trying to fill in that candle. So yes, I think it's in play. Excuse me. I don't think it's a spectacular play yet, but it held it. Look at this. The monthly chart held the trend line. Look at that trend line. From the low that was made around about May, I think it is. Is that May? April of 2013 at 21.11. It goes straight to the low of 19.37 in August of 2015. And that line gets just touched twice, 3 times actually. November, 17.46. December, 17.25. January, 17.53. It's just making a nice little U-turn there. So yes, I think that it is in play as a trade. I wouldn't expect too much yet. It probably has to do some backing and filling, but it's acting very well. So I was asked that question earlier and asked it again. So I'm saying, would I buy it at 18.96? I would start a little position, just a small position, but I would actually put in a buy at 18.32 to 18.16. That would be where my first real attempt to get in and see if you get it. If you don't get it, then you've got this little position you might want to add to if it starts to rally. But that's kind of the area. The base area is in the low 18s. If it breaks under that, it's going to take a while. But it now being kind of in the right area for what they've got left in that whole oil, what they were buying. Let's see what happens there. So the other question I had was, could I look at GDX? Sure, okay, GDX. Holding, it's up 18 cents to 23.29. You see the 200-period moving average. That's the orange support level in the daily. This is the daily chart. Went to a peak B. It's had 1, 2, 3, 4, 5. This is 6 candles. It's using up time, but there's a pattern that I use. I love this pattern. It's called the Chapman Wave falling axis. Really a cone, a declining cone pattern, making slightly lower highs and much lower lows. And it's holding quite nice. I wouldn't be surprised if there's one more dip to the downside. A test of the 22.94 to the 22.83 area. 22.98 is the 9-period moving average in the weekly chart. And then we'll see if it's able. But at any point in the next few days, if the GDX, the gold miners, breaks into the 2360 area, that's going to be very positive. Basil Chapman sitting for Tom O'Brien. I'll be right back. Dow is down 20. S&P down 3.5.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, Basil Chapman sitting in for Tom O'Brien. Let's just do this quickly. The VIX is trading at 9.91, down 17 cents. This is what we call the fear and greed indicator. I like to look at it just as levels to watch, price-wise. It's trading at 9.91. Not only is it under 11, it is under 10. You can see the 200-period exponential moving average on the daily chart here, the orange line. Look how it's repelled the price every time. Even today it got there. The high today is 10.85. The 200-period moving average is at 10.95, and it got repelled. And that's saying to me there's still buying potential going on right now. So I wouldn't be fighting this. The spike that we had up yesterday and today, and the fact that the market didn't tank, is just really important. It means there are a lot of buyers out there. The weekly chart is starting to suggest that there is insurance being bought in the VIX index, but that's it. Until you see the volatility index start to close in the 11.75 or higher area, and bad news, the market picks up whatever news it is as bad news. It doesn't matter what it is. It says, hey, this is bad news. Remember, I'm talking about the different aspects right now that could be involved. You've got NAFTA, you've got yields, you've got certain sectors that are overbought, you've got the semis really struggling. So this is going to tell us what happens over the coming week or two. But just make it real simple. VIX index starts to go into the 11s or higher, watch out, and closes. It must close there. Can't just spike and stay there. And preferably you want 2 strong days of the VIX. You can't just have these one-day pop-ups. And then you've got to say, okay, be a little bit careful. Let's just go through the numbers again. The Dow right now trading down just 18 points, 20 points at 25,364. If it takes out this trend line right here and spikes into the 25,550s, that's going to be really important. That'll be a breakout. It's going to force people in. If it pulls back and starts to trade under 25,250, actually 25,100 is the area. If it goes under that at any point, that says, watch out, you've got some consolidation coming up, sideways at best, limits the upside. I'm trying to make it as simple as possible for myself, subscribers, and for hopefully you. And you can do the same thing with the S&P, and we'll be looking at...
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We gonna take it by storm?
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
And welcome. This is Dave White sitting in for the one and only Tom O'Brien. We got a lot of stuff going on. Got some earnings coming out after the bell. We'll talk about what happened today and sum up the market. But interesting day, but not surprising, at least on my call during my show at 2. I called for what I kind of think is markets that are just a little bit tired of going up. Probably going to see some sideways action. And of course, the real question is, how are these stocks going to react? Earnings probably going to be okay. Some may be a little bit better than others. The real question is, what do these guys say in the conference calls? Because guess what? All these guys are looking, most of them are looking at significant changes to the tax policy. Some of those people were well positioned. Some of them were not. And we had that this morning. Lennar came out, was down at 65.75 earlier in the morning. It closed out at 68.25, mostly on the basis of their conference call looking at strong sales. They are in the right parts of the nation that will do well. I know that they're big here in Florida, but they think that the preliminary interest of the last month of the year and the first couple of weeks so far makes them think that we've got or they've got the right combinations and are in the right states for growth. KBH Homes is out after the bell tonight, and the first blinks I see are them down a little bit. But again, so was Lennar before they started talking about how things were probably going to be better. Now, this is not going to be across the board, and a lot of it also has to do with how much cash is overseas that can be repatriated. So U.S. companies, U.S. builders, probably not going to get into that. They're going to be more about the taxes. The companies that have global reach, like the FANG companies, going to be a lot about how much of that cash is going to come back and be put into share rebuying. Now, just remember that 5 stocks out of the 100 in the NASDAQ basically ended up being 58% of all the returns in the NASDAQ last year. So, you know, they're heavily weighted to a handful of them. Those handful, of course, have the biggest cash reserves overseas. So if you're going after the NASDAQ, it's going to be problematic. And you think it's going to go lower. If you're looking at things, maybe there's pockets or sectors in the S&P that might be better off. But when they start going down, my guess is they're going to start buying their shares back. And you're going to be fighting a long and protracted battle costing millions of lives, waiting for these things to pay off. This may be the proverbial pot that you wait to see boil. Now, there are going to be stocks that both outperform and underperform this year. And your job, I suspect, is not going to be playing the indexes, but playing individual sectors and more likely being in the right individual stocks over the next year. As we ended the day, we were down 3 points on the S&P cash. The Dow was off, 17 almost. NASDAQ was down 10. That was way better than some parts of the day. But again, everything kind of shows that we kind of got up to levels that were fairly high. And it didn't really look like they were going to roll over. It does look like there is an opportunity to take a look at this market and say, maybe not topped out, but tired. And maybe it needs a rest. Maybe it needs some earnings before it can find a footing and go higher. Maybe it's just going to go sideways for a while. You can look at when commodities tend to run fairly well. That's a fairly good indication that the equity markets go sideways a lot of times. So you might get an idea of that. And of course, gold and crude up today, but we'll also talk about that. And of course, as always, I like to start my show off with a little bit of history. And we do that with the history song.
Then it's all just a little bit of history repeating.
It is history repeating, and on this day in 2009, Satoshi Nakamoto releases the first vision of Bitcoin software and launches the network of the decentralized peer-to-peer cryptocurrency that has become the bubble du jour in markets. 6 days earlier, he had generated his first block of 50 Bitcoins, now known as the Genesis block. And eventually, they're pretty sure that you know who did all this. It's a millionaire, not quite billionaire, down in Australia. They did find a lot of these early emails on the mailing list and tracked it back to his home. Doesn't mean it was him, but probably means somebody in his home. And certainly, it's probably him. But we have no proof. Even the Australian government raided his home when they figured that out and came up with nothing. So maybe he's got it buried out there in the vast wasteland that is most of Australia, but no one will ever know. But the phenomena that happened overnight actually started almost 10 years ago today in 2009. Again, a lot of stuff going on out here. Of the outperformers in the market, the ones I was looking at tended to be the airlines today. Most of them gapped up. We've got earnings in the morning for those. What is it tomorrow? Okay, Thursday, Delta Airlines, Shaw Communications. I think that's kind of it. Delta is at 7 a.m. And, of course, then we get to Friday, it's really a lot bigger. And I think the market's kind of on hold for that. JP Morgan, Wells Fargo, BlackRock, and PNC all before the bell on Friday morning. So we're going to probably see what's going on in that part of the market. Well, it is Friday, or not Friday. It is Wednesday, and I'm sitting in here for Tom O'Brien. And you know what? I would love to hear your dulcet tones. Give me a call at 877-927-6648. Email me at path@tfnn.com or put a message in the den, and we'll cover it too.
Folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And welcome back. This is Dave White sitting in for the one and only Tom O'Brien. We're looking at KB Homes coming out after the bell. It's up $1. That doesn't really change anything in the scheme of things. Maybe finishing a rather large ABC on the way back up. So we'll see about that in the morning. But of course, it was down a little bit right after earnings. some comments from the company. They're going to have an earnings call at 5, so we'll know a little bit more. But right now, up $1. That's not going to change a lot. And again, most of these companies over the next couple of weeks pretty much priced for perfection. And when pricing for perfection, that's it. You got a little bit up and the possibility, maybe slight possibility, of a whole lot lower. And that's kind of it. But we'll be looking at some of these stocks on Friday, especially the banks probably starting to get at least some kind of movement for what's going to happen into earnings season. You can give me a call at 877-927-6648. As we said, KB Homes out after the bar, Lennar, the same kind of thing. Let's take a quick look at Lennar. Just looks like some nice, big, long trends. So not a lot new in this. Just a lot of kind of straight up, depending on how long you want to look at these things. But you know, a little bitty pullbacks. But again, not a rousing rendition today for Lennar, but certainly the better the alternatives for them being lower. Now, of course, when we went to gold, this and the whole sectors between the dollar and bonds was all moving this morning because the Chinese had talked about never buying any treasuries in the near future again. I said on my show during the 2 o'clock hour that I didn't think there was a whole lot new here, that they hadn't been buying bonds and they'd been actively selling them over the last 2 years. So not a lot to see here. I think everybody figured it out. Maybe it was the shock of actually saying what everybody knew out in public for the first time. But that's kind of what we're at. It was gold was a little higher. It certainly looks like a consolidation is going to hold. I am fairly a decent bull gold, but I suspect that we are in the last wave of a gold move. Those waves can last for years, and they're characteristically very light movements higher, but very consistently. It's kind of a tortoise and the hare thing. And if we could just keep seeing that these levels hold and they go up a few bucks each day, that'll be all I need to hold. I suspect that you're not going to see a lot of wild movements in gold. It's going to be slow and steady. That's the way that most last waves of big moves in all things do. Not a lot of juice, but again, at the same time, they're not moving in huge levels. And of course, you know, you've got some other things out there. Platinum was up 350. Copper was up $2. Copper seems to be in a pretty good area at $3.20, almost $3.24. It was up 2.2 cents today. So that kind of still looks good. I don't see a lot out here that makes me scared of the markets. I do see a lot that makes me think that there may not be a lot of money to be made in general and maybe even in most sectors, but there's a handful that do. When we looked at crude today, it did close out above and higher at 63.43. But again, I think everybody's expecting these things to really take off to the moon. My guess is that as they move, it'll be slow and steady. We're not probably going to have the wild gyrations that we had before if these are some real big moves that are coming in commodities. Commodities do have a big opportunity to move when markets go sideways. So if we see a lot more of what we had today, kind of a good time to pause and reflect and look at the sectors that seem to be moving. But we'll take a look at some other stuff. Anyway, gold up a little bit, but again, not huge signals, but certainly do love the December 12th low at 117.40 on GLD up to this high. May need a couple of weeks or even maybe less than a week to consolidate around this 125 level in the GLD, and then we'll look at higher, but a lot of them. Do we have time here? I think we do have time here. And one of the things I did want to talk about today was a webinar that I'm going to have a week from today. It'll be a week from today. I think it's 6 o'clock. And we're going to be talking about some new charts that I've developed to go after sectors, thinking about what was going to happen this year. Spent a little bit of my Christmas vacation working on this, but I had been working on it all the fall. And that was a new way of looking at sectors. Everybody looks at the ETFs. I wanted to look and see, and started with how many stocks are above and below the 9-day moving average. And to my surprise, I got some incredibly decent and wonderful signals talking in the gold market. In fact, let's go back here and pop one of these up like the GDX here. We'll create that chart. Hopefully everybody can see it. I suspect that just about every time these things hit the minimum level, which is I'm holding my mouse over here, if you're just listening to us, you get these kind of nice, what they call in the McClellan oscillator, fish hooks. Fish hooks almost at the extreme levels of any movement in any sector are almost always a buy signal. Generally, you hardly, probably 90% time, don't lose any money. Maybe at worst, you get a sideways action or a tiny bit down, maybe a double retest of the lows. But I saw that back in the first and early days of December. You had nothing but a move higher. We've got wild divergence off the highs going into yesterday. I don't have this chart updated for today. I'll have that. And generally, I get my data around 6:30. But we moved way back down. Everything went below the 9-day moving average. Well, I'm going to say 85% of the stocks in the GDX sector did. And what are you going to see? You know, we had a little tick up here today. My guess is we're going to see some more of the same. But we go from exhausted to depressed in the markets, and that's basically what these charts show. I'll show you how to read them, what to look for, and one of the reasons why I thought, well, let's do this, because I do have the ability to do that. I finished this last night, which is where are these SMHs at here? Small caps. There they are. Semiconductors. Wanted to be able to make charts instantly here for the webinar next week and the show tonight. But anytime you get way high in these, doesn't mean that you're going to wildly pull back, but it does mean that probably the move, such as it is, has been kind of washed out a great deal, and there's probably not a lot more to the high side to come. We've seen that in a lot of these, and not a lot of signals that these things want to pull back significantly, but they have kind of topped out at least a short term in a lot of these days. And of course, when you look at the ETF, some of those things are skewed in it. This is kind of a bigger look deep inside each ETF, where we actually calculate the numbers from each and every stock in that ETF. So kind of a deep dive into sectors. We'll be back in a minute.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his gold report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. We're going to continue to look at some of these stocks and see how they closed. And let's go down a list of the FANG stocks because they kind of look, well, maybe the most tired of the bunch out here. And again, they've had some fairly decent runs. But, you know, when you get Amazon just kind of going sideways as it did today, it looks like it's may have completed an ABC on the way up or very close to it. You may get a little bit of a pullback down to the 12.10 level in Amazon, but it's hard to really figure out that there's a whole lot below it. Much more interesting are the ones that are getting pummeled in the press these days, like Facebook. When we look at Facebook, this one did go lower today, kind of closed higher. Doesn't look like it wants to break out, but at the same time looks like this 186 to 188 level is going to be here for a little while. The ones that were more interesting to me out here were how Intel and some of these others that are getting constantly pummeled did, and the volume coming in on the end of the day. Intel actually looks like it could be a buy here again. The 27th of October, this went higher with 90 million shares. We're back into that gap. Everybody that listens to my show knows how I love for these gaps to get filled by about halfway, somewhere around $42 or so. If this continued light volume of 43 million shares against that 90 million shares, 50%, pretty good idea that you're going to have some decent support at these levels. And again, this has been one of these things where the reporting has been really, I think, kind of out from left field. Not actually sure what the impotence is for the press deciding to hop on these folks. But I always remember when press decided they hated the SUV. Instead of somebody driving a SUV up into the front of a building, it was the SUV that drove itself up there. If you read the Associated Press, there was always a way that they worded it that made it sound like the evil trucks were something out of Christine, a novel from the gentleman from up there in Maine, that they were self-possessed. They were evil. And I get a big whiff of that in the media these days. The whole idea that Apple is responsible for addiction on iPhones seems rather ludicrous on the face. Saw a decent study today that said that 75% of the people, something close to that, didn't think that Apple was responsible for kids, thought that their parents were. probably a fairly good idea. Opened a little lower, up a little higher, but again, a lot of people beating on these things, and I don't know if it's maybe funded by somebody that wants to push these things down so they can buy them. But Apple also letting rumors fly today that they've got maybe 120 billion to 150 billion in the next 2 years that's going to be repatriated and spent on buying their own shares back. Now, that didn't have a lot of effect today, but this is the kind of talk that I'm thinking comes around earnings, and it's going to depend on what these companies actually do. Just a huge consolidation in Apple at the moment. They do have some neat new products coming out. I don't think they've shown any of them, but there's going to be, instead of the old one iPhone, there's going to be 3 or 4 by the end of the year, and they're going to be much more like the Note from Samsung. And I think we're going to see that kind of competition come back in, but Apple certainly hasn't as at least decided to change the fact that you can only get the sizes that they manufacture because they know better than you. They're literally going to go after that market that Samsung has, especially what's known as the phablet market. So what else can you say out there? Anyway, we looked at Apple out here. Let's take a look at Netflix and FLX. A lot of talking up Netflix this morning about how much more room and how Disney won't bother them. A lot of happy talk for Netflix this morning. Opened significantly lower, closed out pretty much where you would think it is. Volume wasn't all that exciting today, 5.4 million shares. When we look at those, that's kind of typical out here, but for it to gap lower and move higher, still that kind of problematic move. As we said, when I was looking at the airlines with earnings tomorrow, almost all of these gap up. They're just at the resistance levels. We saw that in American Airlines today. It was up on 7 million shares back into the high that had 5 million shares back on October 11th. That was $53.74. Delta, which comes out in the morning, did the same thing, down lower. Actually, the chart looked fairly good for a buy yesterday. Gapped up on the 14th of December, did so on 13.5 million shares. Got back into that gap yesterday with this 10 million shares, pops higher today. And, you know, you're probably going to see more about this tomorrow on earnings. But probably wouldn't want to go short yesterday on light volume testing that gap. Other fun facts out here, United Continental Holdings, another one did the same gap up, but on this side, this thing did go through a significant high. That's the October 10th high of last year at 69.62 that had 10 million shares. It just almost got to it, 9.3 million shares today. So this looks kind of good for a run back up, as long as earnings are okay, back up to the $78 level, where there's a couple of gaps down that go back to July 19th of last year. That was about 15.5 million shares. My guess is that's where you're going to find fairly stiff resistance. That's about $77 to about $77.50. So those look fairly decent. Wanted to look at a handful of others, so we'll bring those up here in my scans. As we said, banks coming in on Friday. We'll see how Morgan Stanley did today. A little doji out here. Saw a lot of these yesterday. I'm going to do some scans last night, but these kind of doji candlesticks out here with a possibility of a lower open tomorrow always open the door for abandoned babies. Just didn't see many of those things really come to fruition. Not a lot of follow through. This one a little higher, open tinily higher, but forms a doji. My guess is you're not going to see a lot of movement before that. Goldman Sachs, you know, not the same kind of chart at all. This one continues to move down. Doesn't look like it's done much, but could a bottom be forming somewhere around this 250 level in an ABC up? Well, I think the answer is yes. And if we look at these expansions, you know, you've only pulled back 37% so far in Goldman Sachs. So I don't know how they've talked about how the tax issues will hit them. They haven't really talked a lot about how profits from trading have done. And if they did very well in the last quarter and into the next earnings cycle, this could be another ABC up. A 1-to-1 ABC on Goldman Sachs would take you to 280.21. And not much out here today, but again, no big signal. But looks like a potential bottom in Goldman Sachs, 280.21. Be back in a minute.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
And this is Dave White sitting in for Tom O'Brien. We're going to go through some of the 52-week highs because I think a lot of people are saying that they're getting or thinking fairly bearish, and they may be, but the question is, well, we're still making 52-week highs, and the volume could be a little better, but it's not that bad. On the 52-week high list again today is Adobe. By a few pennies, not as big as some of the others. Alley Capital Financial, another one. Now, this one did kind of give it up, and volume did kind of start coming in. Ameritrade, some of these broker-dealers had some little dojis out here today, so you may want to look at these tonight. But energy off the recent lows in these things has been fairly good up to these highs. Again, I think that they're just waiting. And volume actually today on TD Ameritrade, about 4 million compared to the last high at 3 million shares. back in the 54s. Boeing just does not quit going. Yet another high at 322 today, and volume a little off of yesterday, but not that bad. It didn't move that much higher. On a down day, kind of a nice move. Bank of America, another 52-week high and closing at a 52-week high. BBT, another bank out here, I think reporting in the next weeks or so, another spike to 53.36. No sign on any of these of any pullbacks yet. Best Buy, another 52-week high at $70.78 today. Now, this one still closed above yesterday and the day before's high. So volume pulled back a little on these. What else do we have? Bank of New York, a full and solid breakout on this one today. So we've been running where these financials have been going. Some of these are now starting to give some signals. Don't know what would be different about the Bank of Mellon, but BK, a solid breakout. Volume was okay here today. You had 5 million shares. You really needed 9 million shares for the July 20th high of last year. But you know what? 57.39, it held it. So you can keep an eye on it. Caterpillar, a lot of people yelling and screaming about Caterpillar and Deere, both of these making 52 new week highs today. The difference is these are kind of showing a little bit of clouds on the horizon. The second day of a Doji Fest in Caterpillar, right around these areas. What is this? Closed at 165.87. We look, let's just jump down to Deere real quick. I'm seeing a lot of the same thing. Deere did go higher, closed a little lower than the close last night. Volume did pick up a little bit, though. But nothing that broke a trend line, nothing that broke any moving averages, nothing that really changed a great deal of what's going on in that part of the world. Continental Resources, these things just continue to move up. Again, no signal. This one actually had additional volume on it. So commodities continue to be the leader out here. Comerica, CMA is the symbol on this one. Another new high volume. Not as good as yesterday, but okay. It held its high into the close. Capital One Financial. Again, these financials slowly moving their way higher. This one did make another 52-week high today and on some decent juice, but not the kind of breakout volume. But, you know, these things are getting to the point where they're finishing these ABCs. That doesn't mean they're going down. It does mean they're going to do something different. That maybe include going lower. But at the moment, these things just kind of look fairly close to going out of gas. For stocks that are actually making signals like they could go lower, there are a handful, but not many. Salesforce is one of them. The November 21st high at 109.19 on November 21st, 10.6 million shares. Got into that, and today we just had 3 million shares. Now, it didn't really roll over and give it out, but my guess is that this is headed back to at least test 107. And that's, again, the problem is that these things are giving some signals like they want to pull back, but there isn't a whole lot of distance before they go back and hit those levels. Cisco Systems hit a new 52-week high today, $40.24. Volume was okay by the end of the day. Was it a blowout special? No. But we continue to see a lot of these stocks give a lot of nice signals up here at the highs, but no signals that they've finished. Again, you probably want some kind of a little pullback and another push higher. If that push higher does have lighter volume, then maybe we can confirm some highs in these markets, but that's not over yet. Again, some of these other areas that would suggest and fail first, probably for the rest of the market, like broker-dealers, some issues there. Intercontinental Exchange, ICE, continues to move higher. Didn't really look like it was in any kind of problem throughout the entire trading day. Did close fairly close to its high, $74.55. So nothing in that one to take a look at. Intuitive Surgical, the monster, did gap up, did come with some decent juice. Now, these are the ones you want to watch for tomorrow. If this thing would gap down and leave a big island reversal, then you may want to take a look at something like this setting up its high. But right now, there's nothing. It closed closer to the high than it did to the low. But again, these abandoned babies or shooting stars at these highs can be interesting. But you open up $20, $30 lower tomorrow, that's going to be a huge sign for Intuitive Surgical. But it's just kind of come off a split, and things still look fairly rosy on it. JP Morgan, as we said, all these broker dealers still looking good, look like they're completing their ABCs up, but don't mean that there's going to be a huge pullback in these. They continue to look fairly good. For all the discussion of financials not doing well, a handful of them are doing very well. This started back at $88 on September 7th last year. It's moved up to $110.70 for its high of the day. We did talk about KBH. Want to check back in on that. It had earnings out after the bell. See what it's doing up. It was up for a little while. Still up $1. So just like Lennar, it's not going to move a great deal. These things are priced for perfection. But looks interesting. From a few of the comments I read during the break, it sounds like they think business is going to be good, but expenses, especially lumber, are going to be a little bit more expensive next year. Kohl's talking about them maybe partnering up with somebody, was able to make yet another 52-week high today. This one didn't have the juice. And again, just because these things are bouncing in retail doesn't mean that it's all over for them. But I do kind of think that maybe these things with huge runs in the retail space, they're going into their particularly weak period now, between now and pretty much August. These things probably should be moving lower. And if you were thinking about being short something, I think maybe looking at something like this or Best Buy may offer some opportunities, but we have zero signals right now that these things are out there. We've got a few emails. We'll take care of those in the last segment. You still have time to give me a call at 877-927-6648. I would appreciate your dulcet tones on TFNN today.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you haven't tried David White's weekly investment newsletter, The Technology Insider, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Technology Insider. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back. Dave White sitting in for Tom O'Brien. We're wrapping up the show today. And, of course, we've got some earnings out after the bell. And, of course, one of those is one that I'm a customer of. It's called Progress Software Corporation. They make tools for a lot of developers, and they make very good tools. And I pay them some money every year. So not surprised these things are doing well. They're up 7% after hours. They make a lot of tools and software development assistance for multiple languages, and then controls for various software. But doing fairly well, and I don't know if there's anything else you can say. They posted a wonderful profit. This is, let's see, net income of 34 cents per share. Earnings were adjusted for non-recurring costs and stock options expenses were 67 cents per share. And everything looking pretty rosy out here for these guys, so you may want to check them out tomorrow. These look like it is going to be a breakout, so maybe there's a little bit of a bright spot out here in a rather placid market, I suspect, until Friday morning's banks report. But we certainly have that. And with a minute left, just wanted to remind everybody, I'll have a webinar a week from today. We'll be talking about my sector analysis tools, my sector oscillator. I think you're going to find these things very interesting. You can try either one of my newsletters with a money-back guarantee for 30 days. And I think that's about all you really need to know about that. Done a lot of work on them, but man, these things are fairly simple. And it kind of remind me of the guy who was explaining no hold'em poker. It takes 5 minutes to learn, lifetime to master. I don't think so. I think maybe 5 minutes to learn, maybe 30 minutes by the time we're done. I think you're going to get a good idea of what I'm doing and how they work and how well they work. See you a week from tonight at my webinar. In the meantime, sell when you can, not when you have to. And I'll see you tomorrow at 2 p.m. Same bat channel, same bat time on TFNN.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.